So good afternoon, good morning, good evening, everyone. I'm Ankit Shah and I lead the product marketing team at Eka. Today, I'm super excited to welcome you all to the webinar on Race for Carbon Neutrality, Measure, Manage, and Model Your Carbon Footprints for a Better Tomorrow. So before we move on to the webinar, let me quickly walk you through the housekeeping rules. Next slide, Vasudev. Yeah. So the webinar duration is 45 minutes, and we shall try to answer as many questions as we can during the webinar. You are requested to be on mute till the end of the webinar. In case you have any questions, please type into the chat box and make full use of it. The webinar will be recorded, so you need not take any notes in the webinar. Just sit back and hear it from the experts. We'll share you the recording after the webinar. If you have any technical issues, you can reach out to me on email. And last of all, the webinar slides are not available for distribution and are copyright protected. All right, so let me introduce you to the panelists of the session. So the first panelist is Robert Allender. Robert is a veteran in the field of decarbonization and has been advising companies for the last 30 years. I think this was even before the term decarbonization and carbon emissions actually existed. Currently working as an energy strategy advisor, Robert has helped clients across the world to master their energy affairs and thereby create more value for their businesses. Our second panelist is Shuchi Nijavan. Shuchi is India's one of the most accomplished multidisciplinary executives leading the global sustainability and human resources function at Eka. She has been driving force in steering the company's efforts to drive the best-in-class solutions. Shuchi was also responsible for launching the world's first blockchain coffee-based marketplace. She has been working with Eka in the last 12 years and is committed to help corporates achieve a greener and more sustainable future. Our third panelist today is Vasudev Atle. Vasudev is the Associate Director for the Sustainability Solution at Eka. He has a work experience of around 15 years in the field of environmental management, climate change, environmental compliance, audits, due diligence assessments. Vasudev is a certified GRI expert and has extensive experience in GHG emissions and carbon critical designs. So with that, I shall hand it over to Shuchi so that she can set the context and start the presentation and the webinar. Over to you, Shuchi.
Thanks, Ankit. Thank you so much. Hi, everybody. Welcome you all, whichever time zone you are in. Thank you for joining us today. Incidentally, today is the Solutions Day at COP27, and Solutions Day is supposed to be bringing together government representatives, businesses, innovators to share their experiences and their ideas to spread awareness. So a great day for us to be gathering together for this webinar, and I hope that we leave you more enriched than what you came in here today with, and possibly towards the end also resolve some of your queries or clarifications if there are any. So without further ado, let me talk about the agenda today. What would we be discussing? We will be talking about the evolving global regulations on carbon neutrality, how the regulations have evolved and how compliances came in place. We will then be talking about the critical pillars for corporates aiming to reach net zero, which Vasudev will definitely be taking over. We will also then deep dive into the measurements of the scope 3 emissions. Consistently, we keep getting clarifications and queries from different corporates about how do companies measure their scope 3 emissions. There seems to be a lot of noise around it. There seems to be a lot of request around it. So we thought we would address this in our webinar today. And finally, we would be talking about the digitalization of sustainability journey for a better tomorrow. We're all working on digitalization because the quantum of information required to be produced for the multitude of different frameworks and compliance requirements is huge. So how do we get organizations to become more organized, present the right data in the right manner, collect it well in advance so that you are better prepared to manage your sustainability journey and better prepared to subsequently report it for the future. So we would be discussing these four between the three of us speakers. Let me now start with how the global regulations have evolved, right? I'm sure a lot of you are definitely aware of how these came into being, but in 2001, when especially the ESG landscape in Europe came about, in 2001, the EU Sustainability Development Strategy was formed during the 2001 Gothenburg European Council, and it essentially attempted to provide continuous improvement of quality of life for both the present and future generations. Moving forward to 2006, when the Gothenburg European Council proposed these different sustainable development strategies, in 2005, it was assessed that the strategies and the conditions seem to have worsened. That means that there were problems in implementation. So they revised the Sustainability Development Strategy in 2006, and thereby coming up with the overall aim of renewed European Sustainable Development Strategy and develop subsequent actions to enable it. Right. In 2013, the Accounting Directive was launched, which aimed to encourage the member states to provide for different reporting obligations and different accounting and disclosure requirements also. So we all popularly know that unless and until we have some financial regulations, some accounting directives also included, we tend to take a lot of different compliances lightly. And that is when in 2013, the Accounting Directive was also included. In 2014, the Non-Financial Reporting Directive was adopted for the year financial 2018 and onwards, which laid down the rules on the disclosure of non-financial and diversity information. So it was realized that while we were increasingly accommodating the accounting directives and principles, we were not doing a good job in the non-financial directives, and that's why we needed to include the NFDRs for the diversity and other non-financial, including information for large set of companies. And the NFRD introduced a requirement for companies to report both on how sustainability issues affect their performance, position, and development, and also their impact on people and the environment. So the inside out as well as the outside in perspective, and the directive was applicable for companies that had strength of more than 500 plus employees. Then came the infamous 2020 EU taxonomy that we largely talk about, which was introduced for environmentally sustainable activities. Now, this was a classification system, as you all possibly already know very well, to clarify which investments are environmentally sustainable in the context of the European Green Deal. The aim was to prevent greenwashing and to help investors make greener choices. So you're able to see, right, from how the sustainability development strategy was established, then it moved to accounting directives being included, then non-financial directives being included, then there is the investor interest also being taken care of in this sustainability journey. And in 2021, the Sustainable Finance Disclosure Regulation was launched, in which the EU regulation introduced rules for financial market participants and financial advisors to report on how they would account for sustainability risks. And this is where we also had the inclusion of sustainability risks and the mitigation measures being included in the ESG landscape. Now, in 2022, the Corporate Sustainability Reporting Directive, which was then in 2021, the European Commission adopted a proposal for the CSRD, and this was adopted by Parliament just last week. So the CSRD addressed the shortcomings in the existing legislation on the disclosure of non-financial information, which was largely insufficient, not so reliable, right? And The CSRD now has introduced more detailed reporting requirements on companies' impact on environment, human rights, and social standards based on common criteria in line with the EU climate goals. So that's primarily been the journey from 2001 to 2022, since the last 22 years or 21 years that the ESG landscape has moved in the European Union. Possibly next slide, Vasudev. So we have a lot of participants in the webinar from India also, as well as the Asia Pacific region. We thought it be prudent to also cover how the ESG landscape in India has also moved. And India, of course, being a late adopter in comparison to the European Union, we saw that in India, we started with the ESG landscape becoming mainstream for the companies in 2009 onwards, which is when we had the national voluntary guidelines. But the national voluntary guidelines paved way for the business responsibility report or the BRR initiatives for the top 2000 companies in listed companies in India in 2012. In 2014, we saw the corporate social responsibility being included in the BRR report very actively, which was then implemented to about the top 500 companies that were listed in the earnings report in 2015. In 2017, it was integrated into a more comprehensive reporting narrative. And in 2019, these guidelines became a lot more mainstream to include the business conduct for organizations. In 2021, they have slightly modified these to include larger narrative, taking some learnings from the other directives in the European Union. The SEBI has classified them into the newer responsibility initiative, or the BRSR, which is the Business Responsibility and Sustainability Report for Indian entities that are listed. And this is applicable largely to 1,000 top listed companies of India. And now voluntarily, we also see that the next 1,000 listed companies are also applying themselves to the BRSR in preparing for it. And these are now, there is also a conversation around the 2022 SEB committee that has been formed, more reforms and inclusions to make the BRSR more mainstream, to enlarge the scope to the top 2,000 companies. There are definitely going to be more reforms. It's not yet been announced, but there are conversations that are happening with this largely formed council. So you see, this is how we have seen the landscape in ESG evolving across the last 20 years in both of these major regions that are adopting to the ESG guidelines and regulatory mechanisms. Europe is definitely a lot more advanced. There's a lot more narrative and conversation happening around the ESG, a lot more directive and guidelines for the rest of the world to also take learnings from. Vasu, over to you to possibly work through the next items in the agenda.
Yeah, Ankit, is Robert in now, or shall we move to next session?
So there is some network issues with Robert.
Okay.
So maybe we can proceed with your part first, and then if Robert joins, we can take up his part.
Okay, yeah. So as Ankit mentioned, so we will directly move to scope 3 emissions, and then we can cover Robert's part towards the end. So let me just go to one poll before we jump into scope 3 emissions. So we are creating a poll just to understand where all the organizations are in their sustainability or say scope 3 emission reporting journey. So you would be seeing the poll on your screen, and you can select appropriate answer for that particular question depending on what the status is for your organization. So the question is, do you measure and report your scope 3 emissions? And you will have 5 options. So you can respond, I think, in 10 to 15 seconds. We can just wait for. So Ankit, I'm not able to see the response on full screen. So maybe if you can just read out the response.
Sure,
Yeah,
Vasudev. So
yeah.
44% of them have answered that yes, but not all the scope 3 emissions, uh,
Okay,
followed by the fourth option, that is yes, we have just started. And then
okay,
equally number of people have answered like no, but we are looking to start the reporting. So most of them are just
correct.
starting to report or they have just started.
Correct. I think, yeah, this gives a good insight in terms of how we can drive the further discussion. So, before we jump into scope 3, so let's just understand how the GHG emissions are categorized, starting from direct, indirect, or scope 1 to 3 emissions. So, as you are aware, so scope 3 or GHG emissions are basically covering these 7 GHG gases, be it carbon dioxide, methane, nitrous oxide, HFC, PFC, SF6, or NF3. Whereas carbon dioxide is the most talked and most being estimated emission that we speak in these days. So the initial classification that we can do is based on direct, indirect. So whether the emissions are occurring from the sources that are within your control or outside of your control. So if they are within your control, then you classify them as direct emissions, and then if they are from the sources that are not owned by you or outside of your control, then we classify them as indirect. Then based on GHG protocol, we also classify them in three scopes: scope 1, scope 2, scope 3. So scope 1 emissions are basically direct emissions. So they are happening as a part of operations of that particular organization, and they are owned and controlled by the company. So examples include company facilities, processes, or fugitive emissions, or vehicles owned by company, and then they are emitting these gaseous emissions. Then in scope 2, they are indirect emissions and they are occurring at different location, but they are occurring as a consequence of activities of your company. So examples are like purchase electricity, heat, steam, or purchase cooling. And they are normally on the upstream end of your organization activity. Then comes the major portion, which is scope 3. They are indirect emissions and they are also on the upstream, they are also on the downstream. And some examples include, so raw material extraction on the upstream, raw material transport, then your employees are commuting for office, then they are also doing business travel. So these are examples of scope 3 emissions. Then on the downstream side also you have product transport, waste treatment and disposal, then you have end of life treatment of products or use of your products. So that way scope 3 emissions are having major impact on your GHG emissions, and in major cases they are representing major portion of your GHG emission inventory. So we have seen that in majority of organizations, scope 3 is like more than 40 to 50% of your total emissions, and that's why the focus of today's discussion is on scope 3 as a part of decarbonization journey. So just to deep dive based on the GHG protocol categories, so you can see that there are indirect emissions from purchased or say acquired goods and services. So they are captured on the upstream, and you have 8 categories as per GHG protocol, which includes purchased goods, services, fuel and energy related activities, waste that is generated during operations, and as I mentioned, employee commuting, business travel, upstream lease asset, downstream upstream transport and distribution, and also capital goods. Same way on the downstream side, there are indirect emissions which are scope 3 emissions occurring due to sold goods and services and their use. So you have 7 categories on the downstream, which include downstream transportation, use of your product, downstream leased asset, investment, franchises, end of life treatment of your products, and also processing of sold products. So not all the categories apply to everyone. So depending on your organization, say activities or the products that you are engaged into, these categories will apply to your organization. And as I mentioned, they play significant role in your decarbonization journey, and that's why it is important to understand the categories of scope 3 emission. Having said that, why we are not focusing much on scope 1 and 2 at this point of time? Because most of the people who are starting their journey with scope 3, they are already working on scope 1 and 2, and that's why we are not spending time on discussion on scope 1 and 2 in this particular webinar. Then there are different ways to calculate these emissions. So you can apply different methods based on the data that is available to you and based on the accuracy that you want from your GHG inventory. Many times what we have seen is when the organization are at their starting phase of GHG emission inventorization, they don't want to focus on accuracy, but based on the availability of data, they want to start their journey so that they can refine their scope 3 emissions going forward as they report on year basis. So I think that's a good approach because instead of not doing anything, it's always better to start with, say, least complex and least accurate approach than going for most complex and most accurate approach and not doing something for, say, next 2-3 years. So you can choose the method based on the availability of data. So first method is spend-based method, which is least complex and least accurate of these 4 methods. So here you get data from your industry journal ledgers, accounting system, and then you combine that with, say, relevant emission factors from the databases. So example could be, say, if you are getting any product and you are spending, say, X amount, then you multiply that X amount with relevant emission factor, which is, say, kg of CO2 equivalent per, say, USD or whatever currency that you are choosing. So you marry them and you arrive at your emissions. So that is based on the spend, because many times organizations, when they are not tracking the activity data, same time we have seen that they already have spend based data. So that is a good starting point for the organization at their initiation of sustainability reporting journey. Then second is average data method. So here we rely on data from average consumption and default emission factors that are relevant to that particular category. So for example, if you are recycling your waste, then you can see how much of your waste that you are recycling, and then you can choose average emission factor for that particular process of recycling waste, and you can combine these two to arrive at GHG emission based on average data method. Hybrid approach is something which combines data of default factors and that from suppliers or investor or whoever is using that particular product. So it combines both spend-based average data method and also combines the emission factor. And the most complex and accurate method is supplier specific. So here you get data specifically from your suppliers who are providing you those products or whom you are selling those products to, and then that way it provides you most accurate data. So if you take, say, example of, say, laptops, so you know your supplier is providing you emission factors, so you are using those emission factor, multiplying that with number of laptops that you are purchasing, so that gives you most accurate data. But at the same time, not all your suppliers will be able to provide these kind of emission factor for their product, because they are also at the starting phase of their GHG accounting journey. So that way you can use the base method based on availability of activity and emission factor data, and going forward you can try to go for more complex and more accurate method of calculation. Then this just gives you example of how you standardize the GHG emissions. So as I mentioned earlier, you combine activity data, multiply that with emission factor associated with that particular gas and that particular activity to arrive at GHG emission. And as a part of your reporting processes, you need to translate them into CO2 equivalent, which you can get by multiplying each gaseous emission. So for example, if you have methane emissions, you multiply that with global warming potential to arrive at CO2 equivalent, and same way you get it for other gases. So that's how you get your CO2 equivalent for your reporting purposes. Then what goals or what objectives this emissions inventory is solving for you in your decarbonization journey? So first, it is helping you to understand operational risk and opportunities. So uh, you will know that how your organization is exposed to different GHG regulations that are coming up. You may have enhanced market opportunities because you are tracking your emissions for entire value chain. Then you can also guide the investment and other procurement decision based on this scope 3 emissions, because these days many of the investors or say other agencies or government bodies, they are looking after your emissions and how you are reporting them. Then second goal that you can achieve is tracking and reducing them over a period of time. So you can identify the hotspots and reduction opportunities once you have your GHG emission inventory and scope 3 inventory. You can set your targets for short term and long term based on this inventory. At the same time, you can measure and report your performance over a period of time. And ultimately, in most of the cases now, you have requirement of reporting from several stakeholders, be it government stakeholders or be it investors, etc. So you will be able to report to your stakeholders once you are done with your scope 3 inventory, or for that matter, overall GHG emission inventory. You can also participate in your say different voluntary reporting programs as a part of the GHG emission inventory. Then before we jump into next session, so what we have seen recently is what kind of challenges or pain point the sustainability officer faces around these carbon accounting or GHG emission related activities. So you can see you have several questions that needs to be answered around scope 3 emissions or GHG emission inventory. So even you would have faced some of this question, like how do I collect emission data manually, or should I go for a digital solution for that? What could be the penalties in case I don't track or don't report that? How do I know emissions from different facilities if you are a corporate person? Or by when do I need to submit the non-financial report? How do I measure GHG emissions? So these are the kind of questions that comes to mind of several sustainability and environment officer these days. And I think that's why we thought of introducing ECA's sustainability offering to you, which helps you to take your sustainability and for that matter, GHG emission related activities on a digital platform or on a digital sustainability journey. And that will help you to be in a competitive position for say all the regulations or initiatives that are coming in the future. So as you can see on the screen, so our solution is a SaaS-based solution and cloud-based solution, which caters to different use cases, but we thought of putting the important use cases that our clients have seen interest in. So you can see you are able to use our solution for carbon accounting and offsetting. You can use it even for ESG reporting and analysis. So that's the beauty of the solution. So we are not just touching on carbon accounting and offsetting, where you can do scope 1, 2, 3 emission accounting and also do carbon offsetting. You can set strategies, but also non-environmental parameter like social and governance parameter and other environmental parameters like waste, water, or say energy related parameter you can track on our solution. You can also do supplier assessment on our platform based on the criteria that you decide for them. You can track the risk of your sustainability portfolio by using our risk and monitoring app. And at the same time, many frameworks like TCFD or say SBTI, they require you to forecast your emission based on a certain scenario. So you can do that on our platform. But of course, when we talk about artificial intelligence or machine learning, it all depends on historical data. So the more data you have, the more accurate predictions that our platform can give you for your parameters that you select for projection. Then how we do that is we have 100 plus pre-configured reports. then you can track more than 500 plus metrics which come out of the box, and you can process or analyze your data to create different dashboards or insight using 60 plus say formulas or enrichments that are readily available on the platform. And you can bring in your own emission factors if you have say country requirement or region requirement or say company requirement. But at the same time, we do provide support for globally accepted or widely recognized emission factors from sources like DEFRA, US EPA, IPCC, etc. So that way our platform is highly flexible and customizable to get your GHG emissions inventory ready. Then just to give you how the data comes and how you can see the data on the platform. So this is our typical solution technology stack for ESG solution. So you can get the data through out of the box connector. So you can get data from ERP, CRM, HR system, or even other environment management system. But what we have seen is most of the organization who are at the starting phase of their journey into sustainability or GHG accounting, they still want to continue with their existing process of doing Excel upload. So we also have that functionality. You can upload the data on the platform using Excel spreadsheet, and you can process the data using enrichment on our platform. So once you have the data through all these channels, you can create different analytics, dashboards, or data views based on your requirements or based on the hierarchy within your organization, and you can combine them together to create different tabs. So for example, emission related dashboards you can combine together to have emission app. You can combine all the health and safety related dashboards and call it as a health and safety app. So that way you have a choice of creating apps of your choice. You can see dashboards depending on different level of hierarchy. You can create reports. You can share them within the organization on email or at a set frequency, and you can also get alerts and notification in case there is any risk parameter that has breached. So that way it provides holistic view from data collection to end reporting cycle for your sustainability data. Then once you see the solution, you can see that we have these three core apps which cover all the environmental, social, and governance parameter, including GHG emissions and scope 3 emissions. So you can see you have environmental sustainability app which covers biodiversity, effluent waste, emission management, energy, and that way you have flexibility to add any other parameter which is not listed here. And that way it covers all the environmental parameter. Other social and governance parameter are covered under corporate sustainability app and employee health and safety app. And that way you also have flexibility to customize these app based on your needs. Then I think Ankit, if Robert is available, we can go back.
Robert has got his connection back, so maybe we can go back to the second part of the slide.
So yeah, so now I will hand over to Robert before Suchi talks about the case study that we recently completed. So over to you, Robert.
Thank you.
Second point on the agenda. Yeah.
Yeah, thank you very much. You can just leave it on the agenda item for the minute, and we'll go through the slides. Yeah, that's right. Just leave it like that. That's great. And I apologize to everybody for my technical difficulties at my end. Miracles. But anyway, let's get into it. I would like to talk to you all about decarbonization and about how important it is to have a truly excellent strategy behind a company's decarbonization work if you expect that work to deliver anything near to the maximum value that it can. You're watching this, so you know about decarbonization already. You've got a pretty good idea what it encompasses. It's the work, I should use the work often, toward removing all the carbon dioxide emissions in our economy, effectively in our world. And you also know about net zero, but net zero is a goal. Decarbonization is an activity. In fact, it's the activity that will get us to that goal. And it's an activity that companies are going to allocate blood, sweat, and tears to over the next 3 decades. Can you think of any previous time when the business world was given such a long-term challenge a 3-decade challenge. I couldn't. Please put in the chat if you can think of another example. Maybe in the 100 Years' War in Europe. No, they didn't know it was going to be that long when they started. To tackle this challenge without a deeply prepared and clearly articulated strategy cannot by any definition be a great idea. So first slide, please, Pastor Jeff. Most of what I read or hear about decarbonization is referring to the supply side, to the energy industry, whether that's the dirty energy industry or the clean energy industry. It's about replacing fossil fuels with renewables. But the demand side also needs to decarbonize. Demand side meaning business energy use. And by business, I don't only mean small, medium, and large, or even gigantic businesses. I also mean the business of running cities, the business of running militaries, the business of running institutions like public transport systems and healthcare systems and education systems. All need a demand side decarbonization strategy. Let's look at the next slide. It's common when corporate executives are thinking about decarbonization that they identify reasons for doing in these sort of buckets: reputational reasons, regulatory reasons, and risk management reasons. But they'll certainly concur that it's external stakeholders who make up the most significant drivers. Their desire is to retain current employees and win new prospective employees, to retain current investors and win prospective investors, and especially these days about retaining current customers and winning new ones. In the B2B context, it's customers who are now the most demanding, as Vasudev has just been talking about. The reason for this is simple. Those customers have their own net zero milestones to hit, and this means that your company's emissions are their scope 3 emissions. For a decarbonization strategy to deliver all the value it can, those formulating the strategy need to think about those stakeholders in a granular way, in a way that reflects the entity's unique situation, doesn't simply do what everyone else is doing. Perhaps you're familiar with Simon Sinek. He did a TED talk called Start With Why. It's had 60 million views, so I hope you got a share of that. But I think Simon Sinek was in some way wrong. He drew 3 concentric circles. The outer circle was what? If he'd been talking about demand-side decarbonization, he would have said, this is what we are going to do, the target. Then the next inner circle he had was how. How are we going to decarbonize? Name the technology, name the techniques, name the tactics. His innermost circle was why. But if the why for decarbonization was to protect our reputation, to satisfy regulations, to manage risk, then Simon Sinek missed an even more fundamental circle. He missed the circle for whom. For whom are these decisions made? Regulation with whom? Reputation with whom? Regulation by whom? Risks being engaged by whom? So before even beginning to develop a world-class decarbonization strategy, companies need to take some serious time to create more granular avatars of their stakeholders and identify very specific ways their company's decarbonization strategy can create value for the company, far beyond meeting some numerical target. Next slide, thanks. On the matter of risk, let me share a thought that I've noticed even among senior people. Not everyone is very clear about the difference between risk and uncertainty. That difference is that risk can be managed and uncertainty cannot. That difference is a subject is going to be very far-reaching in our next 3 decades of decarbonization challenge. So I want to invite you to take time to create two columns, one for risks and the other for uncertainties. I encourage you not to let there be any lack of clarity about this particular point. Now back to strategy. The word comes from ancient Greek, strategos. It means the art of the general. So there are two hints there. First of all, that it's an art. Strategy is an art. And the second is that strategy is something that's the domain of a person or group of people with the big picture view of what's going on, of where an organization wants to get, what resources it could bring to bear. And of course, it's the domain of those who can make final decisions. Next slide, thanks. I want to share with you this quotation by Jules Goddard. The first time I read it, I was involved in the energy management and energy efficiency business, and I was quite taken aback. But if you think about it, you'll find this provocative statement gives you an understanding of why strategy, including decarbonization strategy, is so important. I'll leave you to ponder that. Next slide, thanks. In the business world, strategy is regularly divided this way. Company strategy or corporate strategy is where the business is playing and how it intends to win. Very big, high-level stuff. Business unit strategy is about deciding what things need to be done for a particular business unit to get it where it needs to go. If you're Marriott Hotels, you've got a company strategy that's about what business the company is in and how it's going to win. But the Marriott in Mumbai and the Marriott in Miami might have very different business mix from each other. They might have a very different labor pool. The owners might have very different relationship with Marriott. And these business units need to have quite distinct strategies in order to be their most successful. And then there's a functional strategy. You're probably familiar with the companies having a marketing strategy, an IT strategy. In my field, companies have an energy use strategy. Actually, decarbonization is a kind of a part of energy use strategy. But because this decarbonization challenge crosses so many boundaries, maybe we could say the decarbonization strategy is cross-functional. What do you think? The role of functional strategy is to make sure all the best results are achieved by that function. Companies don't have a marketing strategy to tick boxes. They don't have a marketing strategy to do the minimum. They have a marketing strategy intending that the marketing function creates the most value it possibly can. A company's IT strategy is about creating more value from the use of IT, more than was created last year, more than any competitor can create, even though those competitors have access to the same IT vendors and the same labor pool. So those forming a company's decarbonization strategy need to understand the company's or the business unit's intrinsic capabilities. Strategy is being described as a cohesive response to an important challenge, and I couldn't agree more. Decarbonization is obviously an important challenge. It may make or break civilization as we know it. It needs a cohesive response, bringing together all the cross-functional threads, even the external threads. If we don't do decarbonization right, we won't get to net zero. And if we don't get to net zero, we'll be 100% in that realm of uncertainty that I spoke of. It won't be anything to do with risk. One of the strategy thought leaders I most respect is Richard Rummelt. In his book, Good Strategy, Bad Strategy, he specified that one of the hallmarks of good strategy is that it gives you guidance. Bad strategy, on the other hand, is full of statements of desire. This is a pair of tests you can easily use to apply when you're developing a decarbonization strategy. Does it pass test 1 or does it pass test 2? For example, this is the new general manager of the Marriott in Melbourne. Let's say, look at Marriott's corporate decarbonization strategy and go, it's clear what they intended. This tells me what decisions I need to make. Or does it say, we will be an admirable company and aim to be clean energy by 2032? You can judge. Decarbonization strategy determines the potential of achieving great outcomes from all your company's decarbonization work. Merely doing the same as the company to its left and to its right is never going to deliver extraordinary returns. This is about finding ways that your hard efforts and substantial investments for decarbonization yield significantly better results for your specific company in your specific circumstances. Let me end with a simple question. Could your company's decarbonization strategy be better? Could it be improved? Could it be more productive in terms of advancing your company's success, its resilience, its sustainability, not environmental sustainability, financial sustainability? If it could be improved, then don't let the opportunity go to waste. Apply your company's peak brain power to the challenge. Make your company's decarbonization strategy a high point of your company's capabilities. And now back to you.
Thanks, Robert. So I will hand over to Suchi. So Suchi, you can just take everyone through the case study that we have.
Sure. Yeah, so you went through the decarbonization journey with Robert. You also went through the essentials of digitalization with Vasu prior to that. So let me walk you through one of the case studies for a client of ours that we did, essentially a large edible oil leader based out of Asia Pacific region that has clients in about 100 countries and about 8 different geographic locations for their plants, right? And the problem statement that they came to us was largely that this edible oil manufacturer and supplier was using needed sustainability report, an integrated sustainability report, a specific sustainability report for their shareholders and their leaders, and also they wanted to consolidate their sustainability analysis and reporting. So they had siloed systems. They had about 3 to 4 different systems where they were collecting varied form of data. Now, there is the accounting data that is being collected in one different system. There is the environmental data that is being collected on the ground from the factories by a certain set of people from which is a different system. There is the HR and the other ERP, which creates or which has 100 different metrics being reported from one different system that has different instances. And each of these is different for the 8 different locations. So imagine the mishmash and the conundrum. And I'm sure a lot of you are able to identify with this, because when we speak to a lot of leaders, they do talk about 3 to 4 different systems that they are extracting the sustainability information from. Even in wanting to analyze where are the problems in the system, how do I rectify those problems? You need at least 3 to 4 different systems that you're possibly taking data from. So how do you consolidate, compile, and therefore understand what is the extent of your problem to begin with, right? In a consolidated format was the problem that this client came to us with. Then there was obviously, because some of these systems are systemic in nature, one system is capturing one type of data, another system is capturing data in another country in a different set of metrics. And there's always the ubiquitous Excel spreadsheets. So there was the problem that the data is inconsistent. Even if I have to analyze it, the person before me that left the organization has left the system with a different set of data than I'm right now confounded with. So the data has historically been inconsistent, and now someone has to manage the extent of that data, right? So that's the second problem. So first is the fact that we have multiple systems that are not talking to each other, that are siloed in nature, from which we are extracting information from. And the second is the fact that even when we are extracting this information from those systems, there is the problem of inconsistent data. Then we have redundant data. What happens is that you get a lot of information from the sustainability teams that is possibly asking for the same data, but in a different format, because GRI asks for data in a certain format, similar data, but in a certain format. Then a different other regulatory body asks for data in a certain different format. So there is the requirement of data that is similar in nature, but the formatting of the data is different for different regulatory requirements. So there is a lot of redundancy of this data that is already there. So we captured and encapsulated these three problems from the client, and I'm sure a lot of you can possibly identify with this. So our approach was essentially that the problem statement was A, to do the ESG reporting, B, to do the dashboarding capabilities for them such that at the click of fingers, every different stakeholder that was involved in the sustainability reporting was able to see what progress is being made, how is it being made, and what are the remedial measures that we need to take to make this progress next. Third was the supplier assessment, because the suppliers are also keying into the decarbonization or the extent of your carbon accounting. So the supplier assessment for their ESG narratives, the scope 1, 2, and 3 emissions, water and waste management, and finally, the risk and monitoring of key sustainability risks. So these were the problems that we thought we had extracted. This is the strategy and approach for us to first manage across these 6 elements. And how would we do that? We would do that through our implementation exercise, where first we sit across within a span of 8 weeks. We were able to first sit across with the client to understand their narrative around these different problems, to collect the data from the different siloed systems in whichever formats that they were available, map it to the ECA proprietary templates, because the secret sauce is in those digital templates that we have, which pander across to a multitude of different frameworks for sustainability. And then we were able to streamline their processes. We were able to also streamline their sustainability reporting across different stakeholders within the company and the external stakeholders, right? So that's what we did. And this end-to-end exercise spanned between 8 to 10 weeks. I think largely we finished in 8 weeks from beginning to end. So that's the narrative for our case study. Very successful, client is happy, referenceable to say the least, and they're adopting the system fast. We were about 20 different users across different roles. To start with, we did a pilot of 5, and now we are adopting to all the different users in the system as well. Next slide, Vasu. So we'll talk about our key takeaways because we're just 7 minutes into conclusion of this webinar. So our key takeaways were how important and what did we need to do to adhere to the ESG regulations and achieving the carbon net zero. Why is it important for us to start early or start ahead in the market? How do we measure the GHG complications? Because they are complicated, that's why you are all here, to see what light we could shed on them. And why is digitalization indispensable for enterprises to scale? We just gave you an example of one such enterprise that we'd helped, but largely a lot of enterprises are going through this journey. And how can our specific solution help you in a time span of almost 8 weeks to get to where you need to be, or at least start your journey in an imminent manner? I hope you've all been able to take these away from the session that we conducted today. I would sincerely like to thank Robert, Vasu, and all of you here as we prepare for the Q&A session. So thank you so much, Robert. Thank you, Vasu. The session was very helpful. I'm sure the folks attending would subscribe to that. And I open this to the Q&A session now. Thanks, Ankit.
No, thank you, Shuchi. So any questions, if anyone has, can feel free to put it in the chat. We had a few questions during the registrations. I'll just pull them up. So there was a question from Shia. So it says we have multiple manufacturing units across Europe. I wanted to know, even though the corporate office drives the decarbonization strategy, should we drive it separately from each business unit also? Maybe Robert, you can take a stab at it.
Sure, for sure. as I said, using the Marriott example, business units are going to have, well, of course, certain business units, not all, are going to have their own circumstances that really require them to do the hard work of creating a strategy that fits their situation. I don't think that it's that difficult to decide whether that's a yes or a no, but of course, it doesn't diminish the amount of work that needs to be done. Again, the most important thing is to create a strategy that's going to create value and not a strategy that's just merely keeping up with the minimum requirements.
Sure. Thank you, Robert. I think that was helpful. We have one question from Bharat. It says, which standards are we using to follow the ESG reporting? Vasudev, would you like to give it a try?
Yeah. So if I understand the question correctly, Bharat is asking about on ECA's solution, right? So for ECA's solution, as Suchi mentioned, we have one template which can cover different frameworks. So currently we are covering 8+ frameworks. So it covers GRI, TCFD, SASB, CDP, etc. So all the widely recognized frameworks we are covering. And having said that, our platform is highly flexible and customizable. So that way, if any new framework comes, you can bring those parameters on our platform without any, need of additional requirements from ECA. So you can do on your own, or even ECA can help you bring those new requirements of any new framework. So that way we are covering widely recognized frameworks, and at the same time we are also providing flexibility to bring in new framework seamlessly.
Sure. Thank you, Vasu. I think, yeah. So the next question is from Hima. She says, does your platform cover BRSR framework?
So as I mentioned, our platform has flexibility, and our base template, which is based on GRI, we map other frameworks against that, and we can cover BRSR as well.
Thank you, Vasu. So maybe we'll take one last question. So there's a question called, so we are a food manufacturing company, and the data is spread across warehouse and plants and are mostly in the Excel sheets. Currently, we comply to GRI standards, and we are looking for SDG and CDP. How can you help us?
Yes, so I think all these three questions are of similar nature. So if you are already reporting on one framework, which means you already have some set of data, then now it is just mapping with our base template, and that way you can create those dashboards or insight that you need for the new frameworks that you are interested in, like SDG or any other framework of your choice.
Ankit, if I may add,
yeah.
So for all of these different frameworks, we have a proprietary template that we work with. So for SDGs, for CDP, for the GRI, even for the BRSR, we have a proprietary template that collects and is able to produce the data in the required regulatory authority format, in the required format. So that is already, that groundwork has already been done by the ECA solution for sustainability. So yes, we cater to all these 4 different sustainability frameworks that you're talking about.